Good morning. Today is Tuesday, 23rd of October, and for the market alert today, I want to focus on indices. You can see here for the D30 cash, we've had a potentially significant break lower as market has extended its recent declines. Now, last week's alert, we pointed out that the market had come back into this region from 11,710 to 11,930, which had previously acted as support and then therefore could act as resistance. This actually played out, and after getting a rejection in this region, the market has continued lower, and in taking out the low of 11,395 seen just a couple of weeks ago, price has actually fallen down to its lowest level since 2016. If we zoom out on a longer time frame, you can see here we've taken out these lows. You have to go all the way back to December of 2016 to see lower prices, and this longer term head and shoulders formation remains valid and potentially in play. You can see with the shoulder here, the other shoulder there, and the head at the high of 13,600. Now, this would target a large move lower from a textbook point of view, around to 9,820, but there's not really much by the way of swing support anywhere around these levels where we are at present, with the next swing level coming in around here at 10,810. Now, the real cause of this selling in the past couple of weeks in Europe has come out of Italy and concerns around the Italian budget. You can see after the Italian budget was announced here, earlier this month, you could see quite heavy selling. The market was around 21,050 after it gapped lower, and we've seen a pretty clean move to the downside really. And once more today we are testing these recent lows below 19,000. We're down around 10% in just a couple of weeks. Looking at wider European indices, you can see the EU 50 I have on here. You can see this is also broken below recent lows, taking out those lows here. And you have to go back to December 2016 again to find a lower price. We do have some support possibly coming in a little bit nearer in this market, around 3,110, this area that acts as resistance there. And it'll be interesting to see how the market reacts if we do fall lower to that. In terms of resistance here, the market will really need to get back about 3,265 before longs can be hopeful that this sell-off is over. Now, the week had actually started pretty positively. If we look at China now in the Far East, you can see we had a large update on Monday. It's actually the biggest climb for Chinese stocks in almost 3 years, a rally of over 4%. But the overnight price action was pretty negative here. We opened slightly lower, and we've engulfed that previous candle and actually closed below the low and back at last week's closing level. So this is pretty negative price action. And you can see we could be set once more for a retest of this big 10,000 level. And if the market breaks below there, then we could see a continuation of this downtrend, which has been in play for pretty much all of the year. Turning our attention to the US, the outlook here is potentially a little bit nicer for the moment. We haven't quite taken out the recent lows at 2712 for the US 500, but we have maybe broken out of a kind of consolidation period that we had here and a possible bear flag. If we do break out below 2712, then obviously further downside is possible, and we could see declines all the way back towards these lows we saw earlier this year around 2530. The US 100, I pointed out in our last alert, had declined 11%. It was one of the hardest hit when we got the sell-off a couple of weeks back, declining 11% from the all-time high of 7727. But comparing this to previous corrections we've seen earlier this year, this is a little bit lower. You can see we had a 13% drop back in January, February, and a similar size decline in March and April. So if we do break down below these lows and take out the recent low, then we could see a further decline to 6722, which would again mark a 13% drop. The US 30 has been a little bit more measured. You can see after the strong selling, we didn't recover anywhere near as much as we did in the US 100. And the level to look to on the downside here is around 24,910. If this level breaks, then it could be further selling, and longs will really want to see buyers step in and defend this level for any hope of a recovery. In terms of resistance, there's quite a lot of way up to the swing resistance that we saw, the recent high around 25,840. And again, it's not really until we move back above here that longs can be hopeful that this sell-off is over. An interesting point I think to make is to look at the volatility index. We have seen a spike higher as you'd expect in the VOLX, which is the volatility index here on X Station today, but the move higher is pretty measured compared to previous declines. You can see the strong selling we had a couple of weeks back had much larger moves to the upside, where this index went up to above the 24 handle, and at the start of the year we had major upside where we got a really large move up to the highs of 29, almost hitting 30. So for the moment, the selling is fairly measured, and whilst these markets are trending lower, it seems in the near term, there's not really any panic stations and large scale declines at present. Finally, just for a UK focus, if we look at the UK 100 cash, you can see this market has been fairly subdued after those declines. We had a period of consolidation. We've possibly broken out of this bear flag, which is this stand here. You can see the flag forming there. And if we do look for a geometric target of this move from the declines of 7565 to, let's say, it broke at 7055, that's 510 ticks. So if you project 510 ticks below 7055, it gives you a geometric target potentially of 6545. Before then, there is the recent low of 6850, which could act as support. And on the upside here, 7110 is an area that longs will want to price get back above and move above these exponential moving averages to potentially signal the end of this sell-off. Okay, thanks for listening. Best of luck if you're trading these markets in the coming days.